Hey everybody, welcome to the Accounting 240 Week 7 virtual meeting. Welcome to those who are here. Welcome to those of you in the future. What's the future like, people in the future who are watching this at some point in the future? Future people have come here for deep, insightful knowledge about what's going to be happening on their midterm. And we'll get into a couple questions today as discussed in my news board posting. I'll go through the problems that people put up there on the discussion board, but unless there were, and I mean, there weren't very many problems that people put up there. So I'll go through the ones that I was asked. And then if people have additional questions, I can go through those. However, I'm not going to do tricks whereby people are like, surprise, let's go through this question, because there was a format for that. And it was going through your problems early and then posting them on the discussion board. So let's see how it goes. Okay. So everybody, hi out there. It's great to see you, and thanks to all for coming. So let's start out by taking a look at the problems that people wanted me to go through. I guess before I start, I'll open up before we get started. Does anyone have general questions they'd like to ask about anything so far in the course? And I'll stare into the camera while you ask me questions. Anything in general? Just general questions, specific questions, maybe later, but anything you want to know. Huh. Forgive me if you answered already, but will the midterm be open book? Definitely not. No, it will not. It will not be open book. It will be closed book. There's no reason you should need to access any of the books for this. It's not a very hard exam. I'm giving you like a little formula sheet, which I posted a while ago, which will give you all the information that you need. It'll limit the amount of rote memorization you have to do, but I'm testing to see if people understand concepts without going through like a volume of material that I've prepared for them. So yeah, no, it's an exam, and it's not gonna be open book. Okay, thanks, Carson. Yeah, no problem, man. Other questions? Let's see, I could not get the PDFs to save for the T5 project, like at all. I tried everything. I don't have any ideas on how to do that, Lori. I'm really sorry. I'm not, maybe this is something that maybe warrants a discussion board posting, unless you did already, because maybe other students can help you. But I know the vast majority of students were able to do it, but I've never tried to do it. I don't need to. And that kind of technological issue is up to the student to sort of sort out. So I wish I did. If I knew how to do it, I would definitely try and solve the problem for you. Print it as a PDF. Hey, thanks, Joss. That's great. So file, print, or save as, print. Oh, it's, what are you doing it? You're doing it in like the fillable form or whatever, and then print to PDF. Yeah, okay, Laura, you want to message me privately because you're gonna need to be able to submit those things as a PDF. It wasn't sort of a, hey, everybody submit these forms in whatever means that you can come up with. It was, but just, I guess you probably emailed me about it or whatever. I'm just like, again, the onus is on, I think, you guys to kind of figure that stuff out. Okay, so I'm gonna roll back up, but we can talk about that privately later, okay? I just, if people, I usually get messages on like the Sunday that it's due, like, hey, I couldn't figure this out. Like, you left it till the Sunday. So let's see, what other questions I got here? We'll sort something out, Lori, okay? Your thing will be marked, it'll be fine, but we'll sort something out, okay? I don't know if I missed this, but is there a practice exam? Not that I'm aware of. No practice exam. The expectation for practice exams is something that, I don't know where it comes from, but look, do all the questions in the course pack. If you do all the questions in the course pack, that's effectively a practice exam. I don't issue practice exams. I generally don't do review classes. I don't know what the point of them are. I just don't have like this is the first time we've had to offer an exam on D2L. I've never offered an Accounting 240 exam on D2L before. And so I don't have practice D2L exams. Like, that's not part of the development time that I get to do these things. It takes a very long time to develop these exams. I just don't have that kicking around. But literally, if you do the questions in the course pack, there will be no surprises. If you've done all those questions, you'll be fine. If you haven't, you are hooped, which is a term that is in the Income Tax Act. It's an official accounting term. Hooped, it means you're in trouble. Do all those problems, understand all those problems, you're solid gold. If you don't do those problems, What was the term I used? Hooped. Okay. Those are as good as a practice exam. Let's see. So what else we got? Okay, no worries. I took screenshots. Yeah, that's cool, Lori. All right, we'll talk about it. Can we use Excel in the exam, Lan? Yes, you can. Yeah, yes, you can. Lan, I'll post, maybe I haven't been clear on that. So if I haven't, I'll post another. There will be more information about the midterm coming in terms of what the format's going to be, but effectively, you'll open up D2L. First of all, I will open up, I'll put in the assignment Dropbox an Excel template. It'll just be an Excel spreadsheet. It's not a very populated template. And then you'll download that prior to the start of the exam. Then you'll start up Proctorio. The exam questions will be in D2L. You will read the exam questions one by one, and then you will make your response in Excel. The exam will then end after whatever I gave you, 3 hours or whatever it is. I can't remember. Once the exam ends, you're going to upload that. I'll give you 5 minutes or something to upload the Excel to the assignments folder. And then I'll mark your Excel spreadsheet. So yeah, you will only use Excel, Lan. All your responses will be entirely in Excel. There will be no responses written in D2L. Any responses written in D2L will not be graded. And I will be abundantly clear about that. And there will always be 2 people who do it anyway, to which I'll say, we had this conversation. So, all right. Are we allowed paper to write on? No, you're not. I posted a discussion board posting about that today. You don't need it. There's no reason for you to use paper on this exam. Just a FYI, and I posted this on the discussion board as well. You go write CPA tests, which I assume if you're taking tax and you're not going to become an accountant, I don't know why you're doing it. Is it for shits and giggles? Are you getting many shits or giggles out of taking the course? My assumption is no. So my assumption is that most people in this course are looking to become an accountant. If you are looking to become an accountant, every single exam you'll write for the CPA, of which there are presently 5 or 6 major exams. None of them, like you do all of them in Excel and Word. So, I mean, the math on this is elementary school math. All right. It's funny. So sometimes I'll go out to social events and I'll meet new people and they'll say, what do you do for a living? And I'll be like, oh, I'm an accountant. Usually, I just tell them I'm a university professor and then I'm like a marine proctologist or something. But eventually I'll be like, oh, I'm an accountant. And they'll be like, oh my God, I could never do that. The math, I can't do math. And I'll be like, well, you can't do grade 5 math? We just add things together and multiply things by another number. Like there's no calculus, there's no trigonometry, there's no geometry. You're literally multiplying one number by another number. So you do not need anything other than the tools that are provided for you on the exam. And I'm saying this to like instill confidence in you. You'll be fine. I know everyone has fear about exams. You'll be fine. All right. Sorry, where will the Excel template be? I will deliver information about that. It'll be in the assignments folder. It'll be in the assignments folder, Lan. In the assignments folder, there'll be an assignment, if I haven't put it up already, folder that just says midterm 1. I'll put up instructions for all of this. It's not going to be something that you'll be confused about on the date of the exam. I will for sure post that up there, okay? Wonderful. Are there more questions and stuff? I know people aren't getting the answers they want, but they're answers. Isn't it better to have an answer and know the answer rather than, I don't know, ambiguity? So if there's anything else you're ambiguous about or you would like some more information on, this is the time that we have together. So you can go ahead and ask me those questions, but don't be sad if you don't get the answer you want. Anything else? Since it's Excel, it means we don't need a calculator. Correct. You are not permitted to use a calculator. Here's one of the reasons why. Number one, the math is grade 5 math, and so no one should need a calculator for it. That said, you're using Excel, and it has all calculator functionality in it. I believe there's also a calculator function. I don't know why I post this stuff to the discussion board, but there's also a calculator function in Proctorio, which you'll have access to. So if you need to punch things out on a screen and use some sort of a elementary school level calculator, you can do that. But my advice for you would be use Excel for all the math. I can't think of one good reason not to do it. I can't think of one reason why you wouldn't just do the math in Excel. It will make your life abundantly easier. You have double the amount of time for this exam that my intention was. Like if I gave this exam in person, it would be an hour and a half. And I'm giving you guys 3 hours. And that should take into account like anyone's lack of familiarity with Excel or the tools of Proctorio, because I understand that maybe using Proctorio is a little scary, but I just delivered it in 375 and it went perfect. There were 0 issues. right? There was no problem. As long as you've done all the things that I told you to do in the instructions, you'll be fine. If you didn't do those things, you're going to have a bad time. But I'm not even going to be paying attention during the exam. I can't resolve technical issues. It's like the issue with the PDFs. Like, my job's an accountant and a tax person. I have no idea how PDFs merge, and it's never been relevant to me. But if I know that if I had to do it, I probably would figure out some way to sort it out. I know it's not that easy. I think I've tried to do it before, and it's annoying. But then I've also been so startled that all the students seem to know how to do it because they're way better at stuff than I am. So yeah, I want to know how to do stuff like that, but I don't. And I don't know. I guess that's all I got for that. Okay. So since it's Excel, we don't need a calculator. Can we print out the formula sheet? No. No, you can't. So here's the deal with that. I was going to explain why that is, Tristan. You can't have paper in front of you. You can't have a calculator in front of you because here's what Proctorio does. Proctorio watches everything that you do. They just like, it's a remote monitoring system whereby it is keyed in to things like this. If I have this up, it will send me on a report a red flag. And then I go back and I review the video and I see what you're doing. Notice how this looks like a calculator. So if people are using calculators, the software is gonna think that it's your cell phone, okay? There's also no way for me to distinguish between what you have in front of you. Is it the formula sheet versus is it, an entire cheat sheet? There's no way to distinguish those things. So via Proctorio. So that's why we don't do anything like that. Is it ideal? No. Is it what we have to deal with? Yeah. And if people are super unhappy with it, I get it. Right? I totally get it. This is not what most people signed up for. That said, you were aware that this was a remotely delivered course when you signed up for the course. Nobody was like, oh, this is a surprise. I didn't know this wasn't going to be in person. Everybody knew that. So there are some hurdles that we have to overcome. And those are the hurdles of conducting an exam online and writing an exam online, which isn't perfect. It's not even that it's hard. It's just new to people. And every single person I know that's in accounting is frightened of new things. Maybe you're screaming right now, no, I'm not. I'm definitely not. But you're in accounting. And there's a distinct personality type that goes into accounting, right? And they're usually like, I don't know what's going to happen in the future. I don't like it. You'll be fine. You'll be okay. All this stuff is like, it's not God, you guys, this exam is so easy. It's so easy. So compared to what this course used to be, which was a very challenging course, this course is now a second-year course, and there's like just not that much going on in there. And I'm saying that I know you guys, I have experience, and therefore maybe it seems disingenuous coming from me, but I'm telling you, the exam is like eminently doable with the tools that you're going to have. You will have access to Excel, which is a million times more functional than an actual calculator. You can do all of your work inside of Excel. There's no reason for you not to get comfortable with that. If this is the future of education, like, we have to come up with some way to monitor exams so that people aren't cheating. And this is the way that the school is provided to us. It's expensive. It's, it's functional to an extent. It's better than nothing. It's not, the best case scenario, I come to everyone's house and I just watch to make sure you're not cheating. But obviously we can't do that. We don't have little robots and drones to fly around. So we've come up with a solution to be able to monitor the exam. So it worked great in 375. I'm telling you, to try and instill some confidence, it was fine. That exam, it's a corporate tax exam. The average was 73% for what was traditionally a very challenging exam, which is the exact same. It was 72.7. And last year I gave it in person. It was 72.5. It was the exact same results. People who are going to get an A are still going to get an A. People who would have failed otherwise are still going to fail. And everybody else is somewhere in the middle. I can't alleviate your concerns any more than that. All right. So you have adequate resources. I very much appreciate these questions. And I don't mean to be stern or heavy handed, but you guys will be fine. Right. You really will. It's going to be an eminently doable exam. I hope that message is coming through to you. You can do this exam. If you've done the practice questions, you'll be fine. If you haven't, what was the term I used? You're hooped. That's the only way you can succeed in specifically tax, is to read the material and practice as many problems as you can. That's it. Have you watched my videos? My videos explain things, right? And so if you're rarely do I get specific tax related questions. Most of the questions I get are like, I need to know more about the exam, or I need to know more about this or that. They rarely involve actual learning. But the ones that I got, I do have 2 questions that people wanted me to go through, and I'm excited to go through them because like that's what I like about teaching. The part that I don't like is like trying to reduce people's uncertainty. Just gain some comfort with uncertainty. All right. You mean the exercises in the course pack? Yes, I do, Lan. That's what I mean. That's exactly what I mean. Those are the exercises that we've assigned to you, and they're in the course pack. So you should be doing those. If you haven't done them, well, you know. Okay. More questions, you guys? I hope I've been clear about what you're going to be. Some of them? No, you should do all of them. No, yeah, all of them. That's why they're there. They aren't there for you to cherry pick them. They're there for you to literally do every single one. And if you don't do every single one, you can't come to me later and tell me like, I did everything I could to pass the test. And then I'll say, did you do all the questions? And you'll say, no, I did half of them. And I'll say, I don't think you did everything you can do to pass the test. Okay. This is a tax course, and I know many people are very scared and frightened about the subject of tax. Okay. If that's the case, you need to allot yourself like at least twice as much time for this course as you do to any other course if you're looking to be successful. It's a new concept, right? It's a challenging concept. To me, I find it straightforward. Well, I got numbers. Some of the numbers are inclusions. Some of the numbers are deductions. Some of them have no effect on tax. That's it. You just got to put them in the right order. That's it. That's all there is to tax. So, I mean, it comes down to, can you decide where all those numbers go? Do you have a strong enough understanding? And it does, require like a fairly strong amount of common sense, because I think when you think about a lot of whether something's a deduction, an inclusion, or nothing, like it's steeped in some, parameters of reality where like it's rarely like nebulous as to how the Income Tax Act people came up with the rules. Like they make a lot of sense in a lot of ways, I think, anyway. But maybe again, that's because I'm familiar with it. So I try to put myself in you guys' shoes. But I was not one who was ever concerned about exams, because like, I don't know, how many exams have you guys taken? Hundreds? It's just another one. It's just like another one of the hundreds of exams you've taken. So, okay. I'm very confident you guys are going to do well. This exam traditionally has a pretty high average. Okay. I'm confident. I'm very confident. I'm not worried about you guys. The people who never show up and I don't know who they are, who knows what they're going to do, because I have no interaction with them. The people who are here consistently on like a week-to-week basis, you guys are actually taking an interest. So it's rare that the people who show up every week to these sessions, it's rare that they do poorly. Right? I think so anyway, because you're motivated, right? People who are motivated show up. I got 70 people in the course. I got 14 people here. Well, okay. You guys are doing everything you can to excel at the course. I can't say that about people who aren't showing up. Right? But they also took an asynchronous course, and so that was part of sort of part of the deal, I suppose, was that they weren't necessarily required to be here. Okay, but I opened it up to them, etc. So we're 20 minutes in, where I've spent most of this time trying to explain the rules of the exam and to the best that I can alleviate people's uncertainty. I think we should probably go through the couple questions that I got, and then if people have more stuff after that. Ryan has 0 things on his calendar except going for a run at 5 p.m. So I can stick around and answer your questions for a little bit. I'm happy to do that, and especially if they're about tax. Okay, here we go. Here we go. Are we excited? We're excited. Let's do it. So the questions that people seem to want to go through were related to Chapter 6. They were some capital gains questions. And one of them was Chapter 6, question number 5, I believe. And this is just about simple share purchases. This is something that, were I to ask a question like this, would be fairly easy to set up in Excel. Question 6.5 from the course pack is, I mean, the solution's a little bit, I don't know, there's a lot of numbers there, but if you just take it line by line, it's honestly, it's like dividing one number by another number, multiplying one number by another number on occasion, and then sometimes you do some subtraction. Like the math is, I'm not joking, it's grade 5 math. Conceptually, it's harder than grade 5, but the math part is grade 5 math. It's adding, subtracting, dividing, and multiplying. There's nothing else going on there. So we'll go through the concepts, but the share thing is like, yeah, it's like a good illustration of how capital gains work, I think. So I'm going to I'm going to share my screen shortly, and then I will proceed through the question. I'll do a little intro because I'm probably going to chop this up and post it as a separate video, which is going to be called Demo of Course Pack Problem 6.5, so that I can have it and use it in the future for future students. And this one's great because even though the dates might change, they're irrelevant. I can use these dates years in the future. This question will never change, ever. Like the concepts behind this will never change. There are things in tax that change, as you know, tax rates and credits, etc. This will never change. So this is fun. Okay, so I'm going to share my screen now. Ding, ka-ching, ka-ching. There it is. I'm now screen sharing. How delightful. So you guys can see that I've got the problem up on the right. I'm just going to check my view here. Grid view. What am I in right now? Okay, just give me half a sec. It always takes me a second to kind of, I'm going to get my chat window up so that I can see if people have questions. If you have questions at any point, of course you should stop me. Yeah, I think we're all set here. Okay, so I'm going to do a little brief intro, and then I'm going to, can you guys see both the question and the template that I've got up here? Everybody can see it okay? That's great. And I know it's probably small if you have a small screen, but if you go back and I tried playing them, these little demos on YouTube and also like just on my computer screen. And if you have it in the full window, you can generally read the stuff that's going on. There's only so big I can make these. I can make this a little bigger probably, like that. And then this one I can probably make a little bigger too. Yeah, that's nice. Okay, cool. Cool. Okay, so here comes the cheesy intro. Hey guys, welcome to the Accounting 240 walkthrough demo of Course Pack Problem 6.5. So 6.5 has to do with the purchase and disposition of identical properties, basically, so shares. So we're going to have a taxpayer who's going to be purchasing and disposing of some shares, and we have to determine for that taxpayer, well, what are the amounts of capital gains, and more importantly, taxable capital gains, that they're going to have to include in their income. Effectively, what are the tax ramifications of buying and selling shares of stock in a company? So that's what this problem is about. So we'll walk through the narrative right now, and then I'll run through the solution with everybody. And hopefully it makes sense. So here it is, problem 5. The following are Mr. Rich's transactions in the Costalata Corporation shares. They're transactions in these shares. Basically, we've got 5 different transactions. So on August the 20th of many years ago, 2016, this person purchases 1,000 shares, and they cost $34 a share, plus there's some brokerage fees involved in that. Yeah, okay, that seems about right. August the 27th of 2017. So in the year 2017, he sells 550 of the shares for an amount. There's also brokerage fees involved in this transaction. Guys, when you buy and sell shares, frequently there's there's amounts you have to pay to somebody if they help you sell those shares. But if you have your own online trading account, you don't have to pay any of these things. It's like $10 a transaction. So I don't know, if you know what you're doing, you should be doing that instead. And so on September the 20th, we then have another purchase, and it says how much they're purchased for, plus some brokerage fees. Oh, it says plug 400. I'll fix that. June the 9th of 2019. Notice these are happening in sequential years to make our life easy. Sold 250 of the shares. Says for exactly how much, says the brokerage fees, and then December the 15th of 2020. Sold all the shares for 20 grand. And then there were also some brokerage fees involved with that. So all we have to do is figure out what the tax ramifications are. Now, upon purchase of any shares, there are no tax ramifications. You buy a thing, you don't have to pay tax on it. It's only when you sell it that there's going to be some tax implications. So it looks like there's 3 sales here in total. So I would expect that there are going to be 3 capital gains or capital losses here, right? And then 50% of that is going to be taxable. Okay, so that's all we're looking at. When we have purchases, nothing, right? We just have to keep track as we make these purchases of how much we've spent on them. That's going to be our cost base. That's all we need to do, is keep track of how much we spent on the shares. Because when we dispose of them, we need to know 2 things. 1, what did we sell them for? Well, that's easy. You have money in your pocket. You know exactly how much you sold them for. And 2, what did we pay for them? And all we're doing here is using a weighted average to figure out what the cost base is. That's it. There's nothing going on here. And I can see how, if you look at the response, it's like all over the place, but really not so much. Okay, so I'm going to go over here to my template that I set up. Again, the template is me going to the solution and just blanking out all the numbers where I'm supposed to input something. That's how I come up with these templates for the solution, okay? There is more than enough information in the PDF version of these templates for you guys to ascertain how things happen. And if you can't, right, you're supposed to keep trying. And if you can't ultimately figure it out, that's when you reach out and say, I'm stuck on this one particular thing. And then I'll respond, or one of your fellow students will respond on the discussion board, okay? Me just giving you the Excel spreadsheet, as I've addressed in the past, doesn't require anyone to do any thinking. It's just like, oh, this is how it's done. But I find that people don't learn very well by just like clicking onto an Excel. The point is, you'll get better at this if you actually are forced to figure it out on your own. All right. So I'm going to jump into the first purchase here. Here I've got the date over on the left, August the 20th of 2016. How many shares did I purchase? Looks like 1,000 shares. So I'm going to plug that in. Okay. And now the spreadsheet already has some functionality to it because I set it up in advance, right? I wouldn't worry about that too much. What you need to focus on right now is this piece right here. Okay. This piece, which is just 2016. Hey, there it is. I bought 1,000 shares. I know what I paid for them. It was $34 a share. I don't know if I can use dollar signs here, but I'll try. 34 bucks a share. Hey, cool. The total cost is 34 grand. I also have some brokerage fees, right? This is my cost base without brokerage fees. I'm just going to dump in the brokerage fees. The brokerage fees were 1,290. Okay. This is my adjusted cost base. This number right here, I'll highlight it in yellow. That's my cost base for those shares. Remember, the brokerage fees get added when you make a purchase. They get added to the cost base. They also get added when you make a sale, right? This makes sense, if you will. Here's how much I paid for shares. Let's say I paid this much. In this case, it's $34,000. Eventually, I'll sell them for some amount that's higher. But I didn't just pay this much. Like, the difference between those two numbers there is not my face. It's going to be, well, that's my capital gain. Okay. But if I actually pay more for the shares, which I did, I paid $1,290. My cost base, what it cost me, is higher, right? It's more. So my cost base is bumped up. Thus, the adjusted cost base. So now when I go to sell them, I'm selling them for the same price, but you can see that the difference between these two numbers is now smaller, meaning my capital gain is smaller, meaning I pay less tax. The cost base is higher because it literally cost me more. That's how we adjust for brokerage fees, because I know I had a question about that on the discussion board, and that's what it is. So there's my total cost for those shares. Agreed? Agreed. So the next thing that happens, and stop me if you have questions, anything at any time. This is a simple problem for me to go through and answer questions on if need be. So next up, and this is my total ACB. I'm keeping a running total of the adjusted cost base, right? A running total thus far. So while the cost per share was 34, here's how I come up with my total ACB on a per share basis, right? I have 1,000 shares. My total cost is $35,290, right? That's the cost of the shares plus the brokerage fees. So this right here, the cost per share, which I'm going to need when I dispose of shares. I'm going to, coming up, dispose of 550 of the shares. Well, I need to know how much per share they cost. Now, in the absence of brokerage fees, it would be simply $34. But because those brokerage fees are part of the cost base, I take the total cost base, I divide it by the number of shares that I have, and now my cost per share is $35.29. Are there any questions about how I arrived at any of these numbers thus far? I'm just taking how much I spent, right? I'm dividing it by the number of things that I have, and that's the per share cost base. So now the next thing that happens, guys, is I'm going to make a sale. So August the 27th of 2017, I've got this sale. Maybe I'll punch that in right here. Let's see. What do I have over here? Uncover. I guess I've got something over here that I want to uncover. Okay, there's the detail for how I came up with the adjusted cost base on a per share basis. Oh man, this spreadsheet is a pretty good one. So how many things am I selling? I'm selling 500 things, or 550 over here. This is my second transaction. So 550. I'm going to dump in 550 right here. This top part is me keeping track of the cost base. This whole part at the top is me keeping track of the cost base. So this whole bit, right? This whole thing is just, I'm keeping track of the cost base of the shares. Down below, I have distinct calculations. Remember I said there were 3 sales? This is where I'm going to be determining, each one of these things is where I'm going to be determining what the capital gain is, right? These are all going to be individual capital gains. That's an individual capital gain. Like these are the tax ramifications down here. There's 3 tax ramifications. You're only going to report this stuff when you have a sale and you have income. When you buy a thing, there is no income. There is nothing to report. There's only things to report when you sell a thing, okay? So now I've got this sale that's happening. I sold 550 shares. I sold them for the amount that we'll get into the amount below because it's we'll need to determine the proceeds. But I need to figure out what my cost base is. What is the cost base on a per share basis? So I can determine what the cost base is, so I can determine what my capital gain is. So the cost per share, we've all agreed, is $35.29. This amount here now is going to be yanked out of the, this amount is the amount that the cost base is going to be ultimately reduced by, like the entire amount, not a per share. So I'm just taking 550 times my amount. That's the total amount of ACB that I'm going to be yanking out of my total ACB, okay? So I need to know what the tax ramifications in 2017 are. I have a sale. I have to figure out what the tax is going to be. So I'm going to go down here to my disposition, okay? So I've got my disposition down here, my sunny disposition. Excuse me. Did I do this right? Up here, I think. No, this needs to be a negative number, right? Right, so this ACB, it is reducing, and I haven't done that yet. It is reducing the ACB. So I have to ensure that this amount is negative. So I should be multiplying by a negative amount here. Okay. Right, my ACB is going from 35,290 and it's dropping because we've extracted a bunch of shares there. So now we go down to this disposition. We have 550 shares that were disposed of. Okay, 550 shares were disposed of. Great. So that's no problem. I have to figure out what my proceeds of disposition are now, right? So I'm going to take, well, my proceeds of disposition. What did I sell the shares for, guys? I sold the shares for $24.50 per share. So my proceeds of disposition are going to be $24.50, okay? And then I'm multiplying that by the number of shares, right? How many shares did I sell? Well, I sold 550 shares. So I could put this in here and be like, okay, well, I have it up here. It's 550. So 24.50 times 550 shares sold, that's the proceeds of disposition, $13,475. That's how much I got when I sold the things. I sold 550 things and I sold them for $24.50 per thing. That means I've got $13,475. That's my proceeds for sure. What's my adjusted cost base? Well, my ACB of the shares is going to be, what's the ACB per share? Here it is, right? When I made the sale, it was $35.29 per share. It's true. So I'm going to just punch in the amount here, $35.29 per share. I, again, multiply that by the amount or the number of shares, right? Would it be easier if this was number of, yeah, it's okay. So 35.29 times 550 is 19,410. That's the ACB. I also have that number up here, right? That's the cost base of the shares that I'm dumping, I'm getting rid of. There's also some brokerage fees that I have to deal with in the year. The brokerage fees were $760. 760. Great. So I take, like when I do this calculation, I'm saying my proceeds minus the ACB minus brokerage fees, right? That's my total cost base that's coming out, right? This is the POD. This is the ACB. This is the, and then down here we have the brokerage fees. So this is the total ACB. And ACB means adjusted cost base. Guys, the cost base has been adjusted here. And so I've got the total proceeds minus the total cost base. Hey, that's a capital loss. I have less proceeds than I spent on these things. That's what happened. I tried to invest in something and I hoped the shares would go up, but they didn't. They went down in value and I needed the money, so I sold them. So now how much money do I have? You know, I got $13,475. That's the amount of money I got. So there's my capital loss. I multiply that by 50%. That is my allowable capital loss. Right there, that number, this is the number that is included in tax return, but only deductible if there are capital gains. Okay. It's a capital loss, but you can't deduct that from all types of income. You can only deduct it if you have taxable capital gains. And in 2017, we don't know if this person has any other taxable capital gains. They certainly don't from the disposition of these particular shares, but that is the taxable item there. The taxable item is the capital loss. Pardon me, the allowable capital loss, all right? Please note, there's the term capital loss. Oops. There's the term allowable capital loss. Note that those two things are different things. One of them is 50% of the other. This is the item that is taxable, the allowable component, right? So that's great. We have now finished up that specific sale of shares and determined what the tax ramifications are of that. Questions so far about the first two transactions? Because our next transaction is a simple purchase transaction. Why we divided it by 2? Because the inclusion rate for capital gains in Canada is 50%. So we didn't, that's why. That's the inclusion rate for capital gains. Also for capital losses. We don't include 100% of the capital gain. We only include 50% because those are the rules. No problem. No problem. Cool. So it doesn't look like there are any more questions. So I'll go back up here to my next purchase transaction. Okay, so here's my little purchase transaction, which is right here. I wish there was a different yellow. Okay, September 20th of 2018. Here's our next thing that we're doing. We're gonna buy a few things. So we're purchasing 300 shares for $19.50 per share. So I'm gonna put in the number of shares that I bought, 300. Yep. How much did I buy them for? $19.50 per share. Cool. I think that's right. Is it right? 550, 300, 1950. Oh, I have brokerage fees of 400. So this is the amount over here. 6250. It's 300 times 1950 plus, again, I'm adding in those brokerage fees. I add the brokerage fees because I'm adjusting my cost base. My cost base is 300 times 1950. And then I spent some more. It cost me more. It cost me $400 more. So I add in 6250. If I total now, right? Here's my total cost base. It's just like a running number, right? 35,290 minus the stuff that I sold plus the stuff that I bought. This number right here, 22,131, is my total cost base for all the shares. How many shares do I have? Well, this actually should have been a negative number right here, right? This should be showing as negative, so. Right, and it would reduce 1,000 minus 550 plus 300. This number here should be negative, and then we're back to normal. Everything's still the same. This reduces the number of shares. So I've got 1,000. I started with 1,000. I subtracted 550. I added 300. That's 750 shares. Everyone's on board with the amount of shares that we have? Bought 1,000, subtracted 550, added 300, 750. I know that my shares cost, or I have 750 shares. I know that the total of the, oh my gosh, the total of those shares, forgive me. We're good. I know that the total cost of those shares is 22,131. That's the total cost, right? I spent this much, and then I got rid of shares for which the cost base was that much. I added this more to the cost base. This right here is the total amount as it was, as I stated earlier. That amount is the total amount that I spent on those shares. Here's the total amount. Here's the number of shares I have, right? If I take the total amount that I spent and I divide it by the number of shares I have, that's the cost per share, right? $29.51. That's how much I spent per share. Everyone on board with that? Seems like nobody's on board with it. Oh, one person is, so that's great. Thanks, Serby. If you buy a bunch of stuff, right, 750 of a thing, and then the total cost was X amount of thing, or was X amount of dollars, then you just divide one by the other, right? So that's the total amount. Now we're going to have a sale. That's the purchase. Let me ask you guys, what are the tax ramifications of that purchase? Of any purchase of shares? What are the tax ramifications of a purchase? Nothing, 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 nothing. Correct. If you buy stuff, the Income Tax Act doesn't care about it. You just need to keep track of the cost base. So that is something that you keep track of, but you're not taxed on it until you are going to dispose of things. The reason that you keep track of it is because when you sell, here, I bought a thing for this much, and then I sold it for this much. You're only taxed on the difference, right? You're going to sell it for this many dollars. You'll get those dollars. But is it fair that you'd be taxed on anything other than the difference between those? No. This amount right here, your cost base, when you get that money back, you're not taxed on that. You made that purchase with like after-tax money, which is kind of a concept that I hope people get, but it doesn't matter. You're only taxed on the difference between what you paid for something and what you sold it for, all right? So the purchase, there's no tax ramifications. Now we're going to get into the sale. So here is a sale on June the 29th of 2019. Let's just see what I've written down over here too. Yeah, again, that's how I got the ACB if you guys need that. So I'm having a sale. Guys, let's check out June the 9th. What did I sell? 250 shares for $32 a share, and I also have brokerage fees. Easy. So I'm going to punch in the number of shares I bought. Remember, there's a sale, so I should punch it in as negative. So I remove this, and this gives me, look, down below, I had 750 shares. I sold 250. Now I've got 500 shares left. Okay, great. And it's this thing. Just going to make a look here. Format the cells. I'm going to go currency. Oh, yeah. So it's the same number. Good. So I sold these shares. I sold 250 of them, and I sold them for $32 a share. That's great. That's great. But this is the amount, because we're just determining what the cost base is. The amount of the actual proceeds is going to go in our little separate transaction down here. Right here, what happens is I had 250 things. They cost $29.51 per share. The amount that my cost base gets reduced by is this $73.77 right here, right? Because that's the per share amount. Okay, and then we continue on this right here, $14,754. That is the total cost of everything I have left. I have 500 shares left, and the total cost is $14,754. That's my total ACB. If I want to know what the ACB per share is, it's $29.51. Okay, so I can leave that stuff now. Now I'm going to go down and figure out in 2019 what is the capital gain or loss. What are the tax ramifications? So here it is, June 9th of 2019. Okay, the number of shares I sold is 250 shares. Okay, so the proceeds of disposition on a per share basis is I sold the shares for 32 bucks a share. I hope we all agree that if you sell what 250 things for 32 bucks a thing, so the proceeds of disposition here are $32 per share. Okay, times 232 times 250, that's my total proceeds. Guys, if you sell 250 of anything and people agree to pay you $32 per one of those things, the total proceeds you receive is $8,000. What's the ACB? You can't determine your capital gain unless you know what you paid for them. Well, I know if I go up here in the sale, my cost base per share is $29.51. I sold 250 of them. So we are going to punch in the $29.51 here. My ACB per share is 29.51. Right? And my total ACB out of that amount there, $29.51 times 250 shares is $7,378. But I also spent more money. I have my brokerage fees of $270. So I put in 270. This again is my POD, all right? This is my ACB, and this is my total ACB, including brokerage fees. Right? Hey, what's this? It's a capital gain. Is it a big capital gain? No. Do I include that capital gain in income? Here's a fun question. Guys, am I going to include $353 in my income? Well, Tristan, yes is one possible answer. And then Summers here says no, and Serby says no. Okay. How come no? No people, how come? The reason the no people are more correct than the yes people is because you do not include $353 in your income. Allowable capital gains. Serby, let's be very clear. There are taxable capital gains and allowable capital losses. That is the terminology. There are no allowable taxable gains or allowable capital gains. Just to be clear, and people really confuse this stuff all the time, so don't feel bad about it. The reason that we cover this stuff here is because the stakes are nothing. There are no stakes to this. But make sure, that's right, Serby, taxable capital gain. The taxable capital gain, the amount that gets included in Mr. Rich's income is $176. Is that the amount of tax he pays? No. He's going to multiply that by whatever his tax rate is. Now, we don't know what it is because we don't know how much other income he has. But let's say his tax rate is 25%. Well, what's he paying? 40 bucks in tax? Who cares, right? He has 8,000 bucks. He's paying like 40 bucks in tax. Okay? Okay. So there's only one more thing that we have to do now, and that is the final sale of the shares. And so the final sale of the shares, I don't even need to do anything up here. What I was doing up here was keeping track of the total ACB and our purchases. But because I know how much the total ACB is, I don't really need to plug anything else in here because we're getting rid of everything. If I were to continue this on, everything at the end would be number of shares, 0, cost per share, 0, total cost, 0. There's nothing left here in this table because all of the shares are gone. So what we'll do down here is just figure out our December 15th sale where we're going to sell off everything. We're selling off everything for 20 grand. Okay. So the number of shares that get sold, well, how many are left? Oh, I know. There's 500 left. We're selling them all. Is that right? Are there 500 left? Yeah. So we're getting rid of all of them. So let's sell off our 500 shares. The number of shares here that we're selling is, I'm just going to go like this, 500 bucks. Okay. So my ACB is punched in here as 14,754. How is it that? That's all I've got left. I'm selling all of them. And that number, 14,754, represents the entire outlay of money for those 500 shares. Because I'm getting rid of them, my cost base on those shares is the 14,754. I head back down. My brokerage fees here. Oh, sorry. What's my proceeds of disposition? It literally says you got $20,000. So just punch in 20 grand. Okay. So 20 grand. My brokerage fees were 800 bones. Hey, there it is, folks. This is my proceeds of disposition. This is my ACB. This is my total ACB, including, oops, ACB. Yeah, that's right, including brokerage fees. Okay. So my capital gain is right here. But again, who cares? This is the only number I care about. Some tax person, some client's going to come into you and be like, oh my God, how much income do I have from this disposition? You're not going to tell them $4,446 because they're going to be upset. You're going to tell them, hey, Mr. Rich, you have a taxable capital gain of 2,223. You're going to have to pay tax on a couple $1,000. You're not going to tell him he has to pay tax on $4,000 because that's inaccurate. It's doubling the amount of income that he has and therefore tax. So that's the run through of course pack problem 6.5. That completes the demo. Now I'm going to cut it off here for the purposes of me filming this, but I will ask you guys questions or let you guys ask questions. I have a question about the wording of the brokerage fees. Instead of saying less brokerage fees, it says before brokerage fees. Will we not then include them in the total cost? Have we not? Would we not? Will we then not include them? No. That's just how much something costs before the brokerage. Where does it say that? Shares plus, less, plug, less. Yeah, Carson, I'm not really sure that I understand the question, but if you pay brokerage fees, okay. I mean, look, if you pay brokerage fees, then if something is if it says before brokerage fees, I have a question about the wording of the brokerage fees. If instead of saying less brokerage, I mean, it's worded differently for the purchases and the sales, right? Problem 4, it had different wording and ended up not including brokerage fees in the total cost. Okay. I mean, I can go and look at that if you want. Are there any more questions specifically about this? Everything here is indicating that you're paying brokerage fees, right? So for the individual purchases, you're adding brokerage. It says plus brokerage fees, right? I spent 34 bucks plus brokerage fees. I hope that that's clear, that that's something that you have to take into account. And then the second bit is sold these shares for X amount of dollars. And then you're also saying there's brokerage fees of $760, less brokerage fees of 760 bucks. So your proceeds are 550 times 2450, but you're also paying out $760 in brokerage fees. So you don't really have the total amount of money. You've got X amount of dollars minus the 760. The 760 increases your cost base and makes the amount. Does that make sense? Like, you can look at it as it reduces your proceeds or increases your cost base. Either way, it's the same result, right? Is that the gain is smaller. It's a smaller gain due to the fact that there are brokerage fees. Sure. I'm happy to look at problem 4 here, but I haven't looked at it at all. So purchase shares at initial offering shares before brokerage. Okay, so sold shares before brokerage fees of Brokerage fee of $50. Okay, well, let me just look at the solution to this. I have no idea what it is. Well, this one I'm not going to run through. Okay. Okay, never mind. Let me see if I can find the actual solution to this. Before brokerage fee, so June 6th of 2017. And then November 5th of 2020. That's weird. Yeah, I can see where the confusion comes in there. My suspicion, hold on, so that's 0, 0, no purchases, sale. Oh, I get it, for the cost base. Yeah, Carson, that's just a screw up. I'll go and fix that. You can see that it's factored in upon the dis. Oh, wait a second. Whoa, 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 whoa. Got it. Okay. Got it. So see up above here where we're adding in the brokerage fees. Those brokerage fees are added in here upon the purchase, right? So they will affect the adjusted cost base. But when we dispose of the shares, right, it doesn't affect the cost base per se of the shares, right? It effectively reduces what the proceeds of disposition are. So you'll see that those brokerage fees show up like the same thing down here. The brokerage fees here in each one of these dispositions, here, here, and here, they don't show up in the purchases. For the purchases, we keep track in our little purchases area, and then upon disposition, we throw them in down here, right? But it doesn't affect the actual cost base of the shares we still own, right? So up here, the brokerage fees upon disposition, it doesn't change the cost base of the shares that we still own because those brokerage fees were associated with shares that we've dumped. So they will increase the ACB of the individual shares that we are selling, but they don't have anything to do with the shares that we still own. Therefore, we do, if you look at that question, those brokerage fees are taken into account. Like I can throw up here's the solution for problem 4, right? There it is. So here are your brokerage costs, right? The problem doesn't have any brokerage fees for purchases. It only has brokerage fees for disposition. So the brokerage fees are incorporated here, right? But because they're brokerage fees that pertain to dispositions, they don't affect the overall adjusted cost base up here. They have no effect on this because they pertain to shares that are gone. Yeah, does that okay? I'm glad that helps. Thanks. I'm glad that we went through that. That's good. So Tristan had a question. Would the allowable capital loss go to this year's because we also had gains? That's a fun question. Thanks. No, we don't have any gains this year. What gains do we have? So are you talking which year are you talking about? So the allowable capital loss is here. Where is it? Where's our there's our allowable capital loss right here, 3347. In 2017, there's a loss. Yeah, no, I'm back on question 5 now. I've jumped back to question 5. Here I am, or I'll put up the template. Here it is. So here's your loss, 3347, correct, Tristan? That's 3347. That's our capital loss. That's in 2017. But we only have gains in 2019, right? And we have gains in 2020. So we could apply that loss theoretically in these years and future years, but we don't know enough about what happened in 2017. And we don't know, no, that's okay. This is a good question, right? But because they're different years, we don't know. We don't know if this person in 2017 had a bunch of other gains. If I were to say this person had absolutely no other gains or losses in any of the years, then you would be smart to say, okay, well, I'm going to carry forward some of the losses from 2017 and I'll apply them against 2019. So that's interesting that you brought that up. So see this loss right here, it's in green. All right, there it is, 3347. I wish I had a better way to, but I'm circling with my cursor. If there were no other gains or losses, what you could do is take these losses carry forward until a year where you have capital gains. So if we knew we had nothing else, we could take an amount of these losses and apply them against these gains. And we can negate that gain. We could also go down here and we could negate this gain. But that's way beyond the scope of what I would expect you guys to do. But it's true. So, okay. That's a good one. Got to do some actual, like, slightly more interesting tax stuff. Anything else about this question? That was great. I enjoyed that. Anything else about this question? At present, it seems like no, there is not. So the other question that I was asked to do was quite a long, comprehensive question, and I'm very excited to do it because it brings in all sorts of different elements. As a comprehensive question, it brings in different kinds of income. And so I think it was 511. So I'm going to jump into doing that one, and I'll do like another little intro thing. As a warning, the battery on my camera might run out midway through, so I'll swap out the battery for a second one, but hopefully it doesn't, okay? So I'm going to jump ahead to problem 11. Here it is. You can see I've created another template for it. Again, the template is created by taking the solution that's in D2L, the PDF version effectively, and then just blocking out. You have the PDF, I have the Excel, and I block out all the, the solutions, and I just plug them in as we go forward. So here's problem 11. Ooh, it's such a, is this it? Is this the one? Yeah, it's such a big one. So fun. Oh, this is going to be great, guys. This is going to be great. There it is. That's as big as I can make it. What a fun way to spend our afternoon. Here we go. Okay, so I'll do a reintroduction here. And then we'll get moving on problem 11. Let me get this out of the way so everyone can see, and then I'll do my little blurb. And here it comes. Hey, everybody. Welcome to the Accounting 240 walkthrough demo of course pack problem 611. This is it, guys, 611. So we'll run through this problem together, and hopefully it clears up any questions you got. Okay, so here we go. Let me do the intro again. Hey, everybody. Welcome to the Accounting 240 course pack walkthrough demo of problem 611. Here we go. Edith Billingsgate worked very hard during 2020 and had a very successful year. She has hired you to calculate her net income and provides the following information. Now, notice she's asked for net income, not income from employment, not property income. She wants her total net income, which is going to have all these fun different elements in it now. Okay, I'm just going to jump ahead to see what the required is, because sometimes people will read through the problem and then start answering it without even knowing what the required is, and they'll do more work than they need to do. My advice to you guys out there, take this to the bank, read the required 5 times. 5. But Ryan, I don't have time to read it 5 times. Do you have time to take the course again? I think not. Read the required 5 times, because you only have a finite amount of time and you need to know what you're supposed to be doing. Here's the required. Calculate her minimum net income for the current year. Great. Let's figure out what this lady's net income is. Boom. Let's start out here. Ooh, somebody wants to enter the room. Should I let them? Okay. Total wages and commissions were $80,000. It doesn't distinguish between wages and commissions, and I don't care right now. I'm just going to plug that in to my formula here. So I've already written this down up here, but you guys would just write this down as you go. The reason I don't type it all out while we're here together is because it would take forever. So wages and commissions, $80,000. You guys need to pipe in if you have questions, okay? Is this part of her income? Of course it is. This is employment income. Note that I've got different areas up here, different segments for the different types of income. I'll start with employment income because this is the order I learned it in. Do you have to start with employment income? I don't care. Should you order things so that all your employment income items are together? Yes. Why? Because you would calculate employment income individually and separately from other forms of income. Also, you could try and keep in mind the people who are reviewing your work. In this case, it's me. Okay, but in the future, it could be some other instructor. Do not make it harder for them to mark things. I can guarantee you that the harder it is to mark things, the more likely it is that they're going to miss something. You want to make your solution as comprehensive as possible and as easy to mark. You need to start putting yourself in the mind frame of like, could somebody who was trying to figure out if I knew things, could they figure out if I knew things based on what I wrote down? So try and make things really organized. It's super important to being a successful accounting person. People who are in accounting, as I said before, they don't like uncertainty. They really don't. So you need to make things very clear. People didn't go into accounting because they like abstraction and vagueness and ambiguity. That's why you're here, guys, because you like black or white. Correct me if I'm wrong. Now, sadly, you'll start to learn that over time, the actual job, there's a lot more questions in there that are gray. There's most of what you do, and when you're like a higher up personnel in accounting, is like they're all gray areas, and that's why you are valuable, is because you're able to make those decisions. If all the if all the questions in accounting were black and white, or in tax were black and white, no one would need you. It's true, they could just make the decisions for themselves. But when it gets into the gray area, that's when it becomes interesting, and people are willing to pay you. But for now, don't worry. Everything you have to do is black and white. This question, it's right or wrong. So here we go. We got the 80 grand. The next thing that's up here is her employer. So this is an inclusion. Everyone agrees. That's an inclusion. Remember I told you for tax, you just go through all the numbers and figure out, is it in or is it out? Let's see. Her employer told her that he had withheld $12,000 for tax, 2898 and 856 for her CPP and EI respectively. Okay. Do these numbers mean anything for tax purposes? For net income purposes, pardon me. Do we have to do anything with those? Carson says no, he's correct. None of these are deductions. You can't deduct any of these items. I'm not doing anything with any of them, okay? Nothing happens here. Bullet point 3, she received $10,000 from a previous employer in 2020. It was money, okay, I'm gonna highlight the 10 grand. We have to figure out what happens with this. It was money owed to her for 2017 wages. Okay, so flat out the 10 grand, if you get $10,000 worth of wages, that goes in your income. It doesn't matter when you earned it. Because you got it now, I literally, before I talked to you guys, a friend of mine called me who is actually an accountant. And she didn't understand why her bonus from 2019 was included in her 2020 income. I'm like, well, when did you get it? She's like, I got it in 2020. I'm like, well, that's when you include it. How did you? And then I said, how are you an accountant again? And then she went off and did some other things. So, okay, so 10 grand. This gets included in income. Okay. And then the next part is fun. Somebody was asking me about this on the discussion board. So here it comes. All right. She received the money only after being successful in her lawsuit. What's her lawsuit? Her employer was also forced to reimburse her legal fees of $3,000 that were paid from 2017 to 2020. Okay. And there were questions pertaining to like, I don't understand where this $3,000 comes from or why we have to include it. Here's what happened. This employer, she earned $10,000 from this employer over a few years. The employer didn't pay her. She was pissed off about that, as anybody else would be. So she sued the employer. You guys know because we've talked about this, that if you are incurring legal fees to obtain owed compensation from an employer, you can deduct those legal fees. So she, over 2017, 2018, 2019, deducted $3,000. Okay. It reduced her income, which it's allowed to do. Now she gets $3,000 to cover her legal fees. Okay. That is not non-taxable income. There are very few forms of non-taxable income. Because she was able to deduct $3,000, she is now going to include $3,000, right? That will bump her income back up by $3,000. So over the years, she deducted $3,000, and now she's going to include $3,000. It is what we call a wash. There will ultimately be no tax implications for her over the course of those years because income goes down, income goes up. There's nothing, right? And so that's why that is included in her income. Okay, it is included because she took it as a deduction before. So now I'm going to make sure that I deduct or add that to income. All right. So here it is, legal. And this is like almost any amount of compensation you receive needs to be included in income. We know that, right? Except for a very few non-taxable benefits. Receiving payments from a former employer in respect of legal fees incurred to sue that employer is not tax-free income. Right? So $3,000. Da, 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 da. I mean, it literally says that, doesn't it? Oh, it doesn't say that. My apologies. It doesn't say that. Yeah. So Bob, great question. Thank you. And I thought it said that. And you have my apologies. All right, for for making that assumption. Yeah. I mean, why wouldn't you? It's something that you're allowed to deduct. So is there any instance in which you were allowed to deduct something from income that you would not do so? And that's how I would frame it, is that, yeah, of course, like it's like any other allowable deduction for employees. Basically, the knowledge that that's testing is, did you know that was deductible? Right? And that's what I'm asking you with something like that. Like, did you get that that was deductible? Right? And of course it was, right? Because that's the number of, that we covered off the things that were deductible and the things that weren't. And there's a very few, very, 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 very few items that are deductible from employment income, right? Otherwise, we'd all, as employees, be deducting everything. And this is one of those things. So yeah. Great question, Bob. Bob Zhu, you're killing it. Thanks, buddy. Yeah. If she got additional money for special damages or something like that, that part wouldn't be taxed, only the 10K and 3K. What's the 10K? Yeah, good question. So yeah, if you sue somebody for damages and then you're awarded damages for, like, I don't know, emotional trauma or something like that, what happens to that money? And the answer is, I don't know off the top of my head. I really don't. I have a feeling it's taxable, I think, but don't quote me on that. I'm going to edit this part out of the video because I don't know the answer. But if you remind me, I'll look it up and find out, which is going to involve me doing a Google search and being like, do you have to include this in income? And then I'll post that, which any one of you could do, but I don't know off the top of my head. I won't ask you about that, though. I'm assuming everything's taxable. Okay. But I don't know. Okay. Thanks, Tristan. I knew someone was going to ask that. And the whole time I was like, I hope nobody asks that because I don't know the answer. But this girl I was dating, she's getting started on her college instruction career. And one of the biggest fears that most people have is that they're not going to know the answer to a question in front of the class. To which I'm like, I know, it happens to me 7 times per class. Who cares? I don't know everything. And like, you just have to let go of the fact that you don't know everything, but you can find out the answer, right? So thanks, buddy. Next up, we've got Bullet Point Port. She paid, oh, I got a question about this too. This is so fun. She paid $500 for tuition fees, okay, for courses that were related to her job. Sweet. It's like me taking a $500 tax course. Hey, Kamosen, I don't know anything about what happens when people receive legal compensation. So I'm going to take a tax course. And Kamosen's going to be like, okay, great, have fun. And then I go and pay $500, right? She took the courses at the request of her. So Kamosen's like, can you please take this course? And I'm like, all right, sure, I'll take it. How much is it? $500. And then they're like, okay, we'll give you 250. Oh, that's nice. Thanks. So we got a couple things here to figure out. Number one, every time you pay money as an individual employee, the question is, can I deduct that? And here in this case, she paid to $500. And my question is, can she deduct that? And the answer is, of course not. Of course not. Just because it happens to be for work, it's still not a deduction from income. Okay. There are, again, this many things that can be deducted from employment income. You taking a course to advance your skill set at a job is not a deduction from employment income. How do I know that? Because it's not in the Income Tax Act. The Income Tax Act has a very small list, and this is not one of those things. So despite the fact that, and you can be like, well, it's for work and work made you do it. They didn't make her do it. They asked her to, and she decided to do it. Okay. It's still not, if you go and look through that T2200, which everybody filled out, right? You guys all filled out that T2200 form for your T4 project. Go and look at that. See if there's a line item on there for tuition for courses. Your employer cannot make you take a course and then you deduct that. What happens for tuition is that you get a tax credit. Tax credits, and you guys know this because you're in school. Unless your parents are paying for school, in which case you probably are signing over the tax credits to them. If your parents are doing the tax returns for you and themselves, guess what? They're stealing your tax credits. They're doing it, I promise you, okay? And if they're paying for your school, you probably shouldn't argue with them, but you could make a case for like, can I please keep those? Because it will be very valuable to you down the road. Anyway, education amounts spent are never deductible. They will be a tax credit. In this case, so the $500 is not a deduction. And then the second part is, well, they gave her 250 bucks. They paid for half of it. Now, when she receives money, you ask yourself, is that a benefit or not? Right? It's a benefit, but is it a taxable benefit? And we know that if you receive money in respect of courses that were taken that benefit the employer, that is not a taxable benefit. So the 250 is not included and the 500 is not deducted. Both of those numbers are nothing for tax purposes. Okay? So are there any additional questions about that, or did I explain it adequately? While you ask questions, I'm going to eat. Guys, I made a pumpkin pie. Delicious. No questions? I mean, I Googled the recipe. It was the first thing that came up. It's super easy, but it turned out great. Okay. Tristan Matthews, according to the Income Tax Act of 1985, I don't know what that is, but okay. Pain and suffering damages are not taxable. For example, compensation for emotional distress caused by a car accident is tax-free. Is this in Canada or is this in the States? I don't know. Just be careful when you Google tax stuff because sometimes it relates to America. That's usually the first stuff that comes up. Okay, awesome. Guys, did you get that? I think that's great. Tristan, thank you, sir. That's the good use of Google. That's like the way we want to use Google to find out information that's interesting to us. So it sounds like it's not taxable. So you guys can either go verify that or not verify it. Thanks, buddy. So let's continue on with this question. I'll probably edit all of this out when I go to the editing bay later on, whatever that is. So we're going to get to point 5 here. Edith really enjoyed her new car, especially because it was owned by the company. Guys, if the car is owned by the company, there is a standby charge. If Edith owned the car, there would be no standby charge. Is the standby charge on your exam? I don't remember. Let's see. Doobie-doop, doop, boop, boobie-doo-doop. Yes. Yes, it is. Are you surprised? Okay, so back to what we were doing. Edith really enjoyed her new car, especially because it was owned by the company. The capital cost of the car was $40,000 and was available to her throughout the year. She drove the car 50,000 kilometers, of which 30,000 kilometers were personal, which means 20,000 of them were employment related. Which is more? Well, it's more personal. If it's more personal, that means there is no standby charge reduction, which means your life is infinitely easier than it would have been if you had had to add in one more fraction. It sounds silly when I say it, right? It's not really that big of a deal, but in this case, you're going to have a very simple standby charge that you're going to have to calculate. You're also going to have to determine the operating cost benefit here, all right? So the operating cost benefit is also dead easy. So I'm going to go through and do the calculation on the standby charge. Now, people take like 10 minutes to calculate this. Here's what it is. It's the cost of the car times 0.02 times the number of months she had it. I'm done. That's my standby charge. That's the answer. Yeah, that's my standby charge. So now I've got to figure out the operating cost benefit. This also should take you 10 seconds. You're going to take the number of personal kilometers, 30,000 equals 30,000. You're going to times that by the rate for the year. Oh my God, you're done. It's 8,400 bucks. That's it. That's it. The standby charge and operating cost. They're finished now. So the total automobile benefit is 18. It is, isn't it? Yeah, it is. That's it. That's the end of that. So we're done with the standby charge. Now I'm going to go to point 6 here. Point 6 says Edith contributed $2,000 to her registered pension plan. Okay, that's the first thing. Edith has paid money. Your question to yourself is that deductible or not? And because it's RPP contributions, we know that it's deductible because that is one of the deductions that is allowed. So this reduces her employment income by $2,000. And we're happy because we like deductions, but you can see there's not that many of them. Also, please note that if you try to deduct the standby charge, I will give you no marks because you don't understand what it is. You can do the little calculation, which is literally multiplying one number by another by another. But if you show it as negative, you don't understand that it is a taxable benefit. And that is if you get the calculation wrong, but you include it as a positive value, I'll give you half marks. But if you get the calculation right, but you show me some negative number, I'm like, this person thinks this is a deduction. That is totally contrary to what we're doing. It's not only wrong, it is very wrong because you're supposed to include it as a benefit, which increases tax. But what you will have done for your taxpayer friend here, Edith, is deduct it, which is grossly understating her taxable income, which is going to result in the CRA being super pissed and imposing interest and penalties and reassessing her. And then she's going to have to pay more tax. Guess who's getting fired? You as a tax preparer. So you need to ensure that you understand the standby charge is a taxable benefit. It is not a deduction, period. Okay? Are there questions about that? You just please don't deduct it. It is so wrong. It is doubly wrong. If you left it as 0, it is better to do because the ramifications will be less severe down the line. You would be better off doing nothing. Okay, so a group term life insurance. Okay, let's see what's next. So we've covered off this. And then her employer contributed $4,000. That's the next piece. Now again, you're flipping the switch here and saying, well, the employer paid for something, and you're not asking yourself if it's deductible. You're asking yourself if it's a taxable benefit. And employer RPP contributions are non-taxable benefits, period. All right, so that item is nothing. Now I'm going to go to point 7. The company paid $400 for $200,000 of group life insurance. You know how I can tell that people really don't know what tax is? They'll include the $200,000 in income. I'm just like, what? That's just the amount that you'll get paid if you die. That's not anything here. What if Edith died? Would that be included in her income? Sorry, Tristan, it wouldn't, but good guess. All right. Yeah, look, you had a coin flip and you went with the other one. No, because it's a taxable benefit, any amounts that are received are non-taxable, right? So that's how that works. So cool. Anyway, the company paid $400. So when the company pays a thing, you have to ask yourself, is this taxable or not? And we know that life insurance premiums are taxable. So I'm going to include $400 in Edith's income. Tristan, don't feel bad about it. Now we know the answer, right? Now, next up, point 8. In 2014 and 2015, she paid 1/2 of the $500 annual premiums for a sickness insurance plan, which means she paid $250 per year, meaning her employer must have paid the other $250. Okay. The premium was increased to $600 for the next 5 years. She also paid half of the premiums in these years. Okay. Let's be clear. The amounts that she paid are not deductible. That's what you have to ask yourself. Up here, there's $500. And you got to ask yourself, okay, if she's paying half of that, is it deductible? The answer is no. The employer's paying the other half. And you're asking yourself, is that taxable? And the answer is no. It's a non-taxable benefit because it's on the list of non-taxable benefits. So now it's the same thing over here, except instead of $250, it's $300. The treatment is the same. So there's nothing we have to do with this at this point. Now we go down to point 9. She was glad she had the sickness insurance benefit because she was sick during 2020. Who gets sick during 2020? Oh, it's like we knew. She got $5,000 of benefits in the year. Okay, so here's how the benefits work. She's getting 5 grand worth of benefits. That is included in income, right? That's a taxable benefit. But the amount of taxable benefit gets reduced by the amount of premiums that she has paid. Now, if I'm not incorrect, she paid 250, 250, 300, 300, 300, 300, 300, right? There were 5 years that she paid $300 and there were 2 years she paid 250. And I think I punched that in down here. Okay. So this is going to equal $5,000 minus 250 minus 250. That's 2014, 2015 minus 300. That's 2016 minus 300. That's 2017 minus 300. Is that 2018? Am I off on the years? Probably. Minus 300 minus 300. Let me just check. 16, 17, 18, 19, and 20. No, I nailed it. So let's see what that equals. I think that equals $3,000. Okay, that's the amount of taxable benefit. It's the amount that she received for being sick minus the premiums that she paid over the years. They're not deductible per se, but they reduce her taxable benefit. So she couldn't take those as deductions, but they reduced the amount of benefit that she had to include. All right, so that's point 9. We roll along to point 10. She also received 6 grand in non-eligible, it says ineligible, that's stupid. Non-eligible dividends, you get the gist though, from the company's shares in June 2020, just before she sold 1,000 shares for $25 a share. Guys, there's some income ramifications we're going to have to deal with here. Now, these items, are they employment income? I think we're done with employment income. What we have here are 2 different types of income. We have property income, which is the non-eligible dividends, or ineligible if you want to call them that. So I'm going to jump down to property income, right? And because these dividends are non-eligible, and I just asked a dividend question, a softball question in 375, and like 3% of people remember to gross up their dividends. So the dividend income here is $6,000. And because they're non-eligible dividends, we're multiplying by 1.15. It's a 15% gross up. So this equals $6,000 times 1.15. And that's the amount of property income we have. We also here have capital gains. Just as a reminder, capital gains are not property income. Property income and capital gains are spelled and pronounced differently, and they represent different things. Property income is taxed. It has a 100% inclusion rate, and it is derived by passive use of your property. Capital gains are when you buy a thing and sell them for a higher price. Totally different, okay? Although I can see how you might think they were related. So for the taxable capital gains, which we're doing right here, and there's property income right here, we're just going to take our proceeds of disposition. Well, there's 1,000 shares. We sold them for $25 a share, equals 25 star 1, $25,000. Now we need to determine, well, what's the cost base? So I can figure out if I got a capital gain or not. It says, oh, the ACB is $27 per share. Sugar. Looks like I lost money on this. So equals negative $27 times 1,000 shares. Aw, guys, look at that. Well, the standby charge and like dividend formulas on the formula sheet. The standby charge, I don't know. You guys have the formula sheet. Is it on there? Go check it. I don't have it in front of me. So that question can be answered easily by just having a look at the formula sheet. I don't have it in front of me. I think the standby charge is on there. I don't know what the rates are, but like, let's see if we can memorize them. Non-eligible dividends, 15%. Eligible dividends, 38%. Hey, we're done. I think that that's a low bar to clear in terms of memorizing how to deal with dividends. They might be on there though. I have no idea, but you can check them. Okay. Okay. So I got a capital loss right here, but I can't apply the capital loss because I don't have any other capital gains. So the amount that goes in here is 0. What ultimately happens to this $2,000 is kind of what we talked about in that last question, where if you have capital gains in the last few years, last 3 years technically, right? Or if you have capital gains in the future, and the future goes to infinity, you could apply the losses at that point. But we can't deduct $2,000 this year. Tristan says it has them. It has both. It has dividends and standby charge. Super. There you go. So there you go, guys. You don't have to memorize the 15% and the 38%. But you should know those things. All right. So that's done. And then we've got 11. You tell Edith that your fee will be $1,000. You're the accountant. She says no problem as her employer. Guys, can you imagine if somebody paid you $1,000 to do this tax return? Oh my God, ka-ching. It's not very hard. Okay, that's awesome. Her employer paid $1,000 for tax prep fees in December 2020. Okay, if your employer gives you $1,000 so you can do your tax return, that's a taxable benefit. You cannot be like, oh, a free $1,000, cool. You paying $1,000 to do your tax return is your decision. It is something that you, as a taxpayer, are deciding to do. Every taxpayer presumably could prepare their own return, but some taxpayers make a decision to pay for their tax return. It is not a deductible expense. In this case, because your employer actually gave you $1,000, you have $1,000 taxable benefit here. All right, so I'm going to plug that into employment income. I thought we were done with it, but we're not. So $1,000 gets dumped in there. And then I'm going to move on to our final point here, which starts off with A. She was given a membership to a local health club when she started employment. Okay, she's given something, which means we have to figure out if it's taxable or not. The cost of the membership is $600 a year. She uses the club regularly, but never takes clients here. Hey, this is a taxable benefit, period. She just like, the work is like, here's $600. Go get into shape. All right. Well, I got free $600. I'm taxed on that. Is that bad? Who cares? You're going to pay what? 20% on that, 25% in tax. You're getting a $600 membership to a fitness club for $150. A taxable benefit is still a benefit. All right. What's next? She was reimbursed $2,000 for entertaining clients. All right. Now we've talked about reimbursements. Here's how this works. The employer's like, hey, Edith, can you take these clients out to what's entertaining clients? Oh, I know. Take the clients out to axe and grind and throw some axes. Okay. And then go and take them out for drinks after, not before you throw the axes, after the axes. And let's say the bill for that evening comes to $2,000. Great. And then Edith is like, I'm paying the $2,000. All right. And then the employer's like, hey, how much did it cost, Edith? And she's like, $2,000. And they're like, okay, here's $2,000. She is being reimbursed. That is not an allowance. It is a reimbursement. She incurred costs and was paid back directly for those costs. She paid nothing. She got to go to the axe throwing thing and get a bunch of drinks for free. The clients got to go out and do something fun, and hopefully the company earns some business. From Edith's perspective, there is no taxable benefit. There is no deduction. The end. And then the final item here is for a suggestion she made. What's the suggestion? Dear employer, I suggest you go straight to hell. No, she probably made a great suggestion about how they could improve the workplace. Cool. Then the employer was like, hey, thanks a lot. You get a trip to Tahiti. Oh man, wow, thanks a lot. I definitely want to go. And so Edith is like, sweet, I'm going to Tahiti. It's not a work-related trip. Her work paid for it, but it's not a work-related trip. It's a $4,500 trip. How long does that get you to Tahiti for? A week? Who knows? It's awesome. It's a benefit. It's a taxable benefit. Even because her employer was like, there you go, free trip. And she's like, woo, free trip. She has to pay tax on that. So I'm going to punch in the trip to Tahiti here. It's $4,500. And then it says calculate her minimum income for the year. But guys, it's done. Here it is. This is her income for tax purposes. Red, blue, green, blue, blue. 125, 400, bold, giant. That's it. Now there's some notes down here which explain literally every item that we talked about. But as far as I'm concerned, that answers that question. And that is the end of that one. And that's where I'll cut off the editing for the video. But you guys, if you have more questions, you can ask them now. This is great. We're almost at the end of our time for today. I thought we'd be done quick. I'm just going to eat some more pie. I eat some more pie while you guys ask questions. Will we get our T5s back before the midterm? I'd like to make sure I got the interest. Probably, but I could just post the solution and then you can check that. Lori, can you asked me about this on the discussion board, and then I was like, okay, well, what's the issue? What's the issue? I just needed you to elaborate, because as far as I'm concerned, like, you calculate interest by taking the amount of money that's borrowed and timesing it by the interest rate. So just report that on the T5. But
I guess I was confused because in the videos that I watched, like from Kathy and yours, the examples that I found had a time frame on it. So like a loan of 5 years with X amount of interest. Mm-hmm. I just wasn't sure what to do without the.
Yeah, but how did that come into play there then? The 5 years, like, it doesn't really matter. Oh, interesting. In that, if it was during the year, she probably wouldn't, or Vincent there probably wouldn't have to include it at all, if he didn't want to. But so your options there are include nothing, or just multiply the principal by the rate and then prorate it for the number of days that it was outstanding in the year. But given that there's no, like, I don't think those repayment terms in the questions that we ask ever factor into the response, right? Right. It's just a interest calculation where you just take principal 575, whatever the rate was, 3%, 3.75%.
3.5, yeah.
Sure, and then times it by, like, how many from March, whatever it was, until the end of the year. How many days is that at a 365? And that's the amount of interest.
291 days. Yeah.
What's that?
291 days.
Sure. Then just that's how much you would include.
Okay. Perfect.
Yeah, the repayment terms aren't really a factor in any of those questions, unless they start to repay the principal. And if the principal started to be repaid, then the amount of principal that was outstanding would get reduced. So when you go to calculate the interest, you would have to just, like, oh, I don't owe 575 anymore. I owe like 475, right? Yeah. So the amount of principal would, and then consequently the amount of interest would be reduced as well. The course isn't really about ever really calculating complicated, like, compound interest, or there's no time value of money in this course ever. It's just like the most basic interest calculations. It's more like, do you know what the tax treatment of that is? And the tax treatment is just like, you have to include that in income. That's what I'm testing, right?
Thank you.
Okay.
Yeah.
Thanks, Lori. And it's so nice that you actually mic'd in instead of just typing stuff out. I much prefer to hear from people. So that's
quicker.
It is so much quicker. What are people frightened of? That I hear their voice? I have no idea. Anyway, Tristan says, I'm a little worried about the T5 because it felt way easier. So either I studied well or totally bombed it. I'm going to guess. I mean, it's so easy. What do you guys think, that preparing a T5 is like a challenging job out there in reality? It's very easy, and it's not something that anyone would pay you very much to do, but it's something that you would be expected to do. It's like grunt work if you go work at a small firm. It's like, hey, this small business is paying a bunch of dividends to their owners. So can you prepare the T4s and send them one to the client and one to the CRA? But it's literally like, how much interest did you make? Plug it in. What are the dividends? Plug it in. Make sure you get the social insurance number right. You're done. I'm giving you guys 3%. We are not splitting the atom here. I don't want to, like, take away from the excitement that you guys have of, like, performing little data entry things, but, like, it's dead easy. We're not doing the science of rockets. We are doing data entry. So, Tristan, there's no way you bombed it. And I have on my list of things to do for this afternoon is just put up the solution. I got to be honest, I forgot I hadn't put it up because nobody bugged me about it until today. And I was like, oh, I better put that up. So I will. And you'll be like, oh shit, it was so easy. It's a guaranteed 3%, guys. unless you wrote the names down wrong. So cool. More questions? It seems like no more questions. Oh, Tristan says, is the Lego house in the back from a movie or just a random set? Sure. Because nobody's asking other questions. This is Lego has a series that they put out that are like the creator series, and they're just like modular buildings that you can add on to other buildings. So you see those little things here on the side. If I were to buy another one, I tried to buy one called a haunted house, but it was sold out, so I could add it on. It's really cute. If you go inside, like you can take the roof off and stuff. And inside there's like, it's a so you can see it's a cafe, and then there's all this little, there's like a Murphy bed inside. I can't really show you the inside, but like there's a little house. It's like there's an artist studio in the loft, and like, oh, I really like these. And just recently I kind of pulled it out and I'm like, oh, I need more of them. So that's on my list of things to do also, is to buy another modular building. Thanks for the question, Tristan. Does anyone have any more questions about either Lego or, I don't know, tax? Or would you like to know about Tahiti? Guys, do you reckon I could teach this course from Tahiti? Because I'm thinking maybe I could. What do you think? Like, what am I doing here? What are you guys doing here? You guys don't have to be anywhere. Why don't you go to Tahiti and like hang out there? No? Okay, well, doesn't seem like there's any more questions. So if there are no more questions, oh shoot, I was screen sharing when I showed you the Lego. You should have told me. You should have told me. Have a good weekend, Tristan. The rest of you guys, you're good? You can make it full screen? Okay. All right, guys, it's delightful to be here. I enjoyed our time together. I hope I helped. What was it that I had to do? I'll post the T5 solution. Okay, I'll do that. Okay, guys, I'm gonna leave now. So. Hey guys, thanks for watching this video. Did you find it helpful? Well, there's plenty more videos for you. Check these ones out right up here. And if you really found this helpful and you want to be updated of all the latest videos, why not hit subscribe? It's that button right over there. Check it out, guys. See you next time.